Now you've been through and watched that first video on exactly how I became profitable as fast as I could with my trade reviews. We're now going to revisit some more trade reviews in this second part video to share with you exactly how I trade with that supply and demand concept. Now, if you're looking forward to watching this part 2 video in this short series, don't forget to give me that thumbs up so I know you're enjoying these videos. And if you're new to the channel today, don't forget to subscribe and hit that notification bell because you'll be notified the next time I release my next video. I also want to add in this video today to say a huge thank you to all my viewers and subscribers, as I've now just hit over that 2,000 subscribers mark, and it's a journey that we're taking together. So I thank you all for being part of my journey with the NFX Trader channel, and I hope to be here for many years to come and to have a great community together. Now, of course, if you want to be inside that community already, there is the free Discord room where I will leave it linked below in the description of this video so you can join up to that room right away. Now, once again, this is going to be a long video, so you're going to want to take some time out to sit down, get that favorite beverage of yours once again, and watch this video all the way through to the end. It's going to help you once again to understand exactly how I place my trades with my entry, my stop loss, and of course those important profit target levels. You're also going to see the trade management as I go through each trade review, sharing with you how I manage my trades once I'm inside a live trade. If you've enjoyed what you've seen in that first video and what you're going to watch in this video, and you want to start to trade for yourself using the same concepts that I share in these two videos, you are going to want to get the new Forex Masterclass. This course is going to help you to see the exact same concepts that I use with my supply and demand methodology and smart money concepts. If you want to find out more on that new course coming out soon, I will leave it linked below in the description of this video so you can go and check out exactly what's in that course. There will only be 50 spots available for this course, so if you are interested, you're going to want to bookmark that page and keep an eye out when it's actually going to be open for you to enroll into the course. Now, if there's anything throughout this video in those trade reviews you're not sure about, don't forget to leave a comment below and let me know exactly what you're not sure of, or if you want some more help in understanding the way I use my supply and demand concepts so you can actually benefit from these videos and apply it in your own trading. So if you're ready to progress going through these trade reviews with me, then let's head over now to myself as we go through the trade reviews once again. So as you can see, we're on the New Zealand US dollar pair, the H4 time frame. Now this entry's actually come off an area of supply on the H4. So let's now go to a monthly first. The monthly time frame, what do we see? We see the monthly area of supply here in control in the market. Our nearest area of a rally-based area of demand is below price, so we have movement to go down. So that's the monthly time frame. Let's now drop down to a weekly. We can also see that the market on this pin bar rallied up, dropped and rallied back up and dropped through. But this is our last area of demand that we would have had on our charts. The market is broken through with this bearish candle. That's now created a new area of supply, and this pin bar is a drop-based drop area of supply, and we have this last bullish candles an area large zone of supply. Our nearest area on our weekly is going to be this area of demand, so again we have room to drop to the downside. So I'm looking for the market from here to drop down to an area of demand. So this is showing me the higher time frames are in control. Let's go to a daily time frame. What is a daily time frame showing me? We had this big drop down, we had this area of supply, and we've had the market now rally back up. Where's our area of demand? Well, this is our area of demand. We have this area of demand here, rally base rally. Now we did also remove this candlestick here, and you could say then that has created these areas of demand as well. But what I'm looking at here is on a 4-hour time frame, and I'm looking for this to be another swing back to downside. That's what I'd rather see, but we do have to keep in mind that this could be areas of demand on the lower time frames on these rally-based rallies on the daily. So on the 4-hour time frame, what do we have? Let me draw these zones out. We have this as our area of supply. And I'm going to draw that from the low of that candle. And you can see this is an indecision candle, so that's why I'm drawing it from the low to the high. We came into that candle with one little test and we've dropped out. And if you look closely, we had this area of demand, which has now been removed. So what's that going to create? That's going to create this area of supply. So the market has now come back into the area of supply. I've placed my stop above the high. It's a set and forget entry style. I've been triggered into the trade. My first target is at this area of demand. I'm looking for the market to continue down, and my second target is this area of demand, and it's as simple as that. I'm looking at the 4-hour time frame. This is where we have a momentum move up, and that's why I'm looking at those targets. But look at the way the trade lost momentum. We had a momentum move, pullback, a momentum move, a loss of momentum, wasn't as strong, a small pullback, a momentum move up again not as strong, and then we dropped out and removed those lows. That is how we can look at a supply and demand approach. So as I said, that is my entry. I'm waiting for the market to drop off now. There's not much else I can really talk about on this trade, so we're going to stop the video here. I'll come back at a later point and we'll update this trade once it's ended up, whether it's a stop loss or whether we hit those full targets. So as I said, I was going to come back and update this trade if anything changed. So let's go over to those charts. As you can see, the market did come down into this area of demand and my first target has now been hit. So what I'm now in is a risk-free trade. I've already got some profit off the table and I'm looking to see if the market can continue to break this area of demand next and continue down to that final target. Now I may well even exit this trade at these previous highs. I'm going to go to the daily time frame in a moment and show you why I may do this. Now it's not a good idea to change your plan halfway through the trade, but I've noticed on the daily time frame that we have that area of possible demand zone where we see this market creating this area of a range bound market. And this could very well become an area where the market's broken up and comes back into, and then we may see another move higher. But for now, we are risk-free on this trade, and I may well look to bring this trade either above this previous high or bring it to break even if I see the market continue to fall. So let's go to that daily time frame quickly, and I'm going to show you that zone I'm looking at is this area here of demand. And that's why I may look to exit this trade if I see a reversal at this area on the lower time frames. So that is the update currently on this pair. We are risk-free now on this trade. We've hit that first profit target. I may move my stop depending on how price moves towards the end of this week. And then we'll come back and update this trade once again once it either stops me out or if it got stopped out at break even or if I hit that final target. So it's been a few days since we last went through and updated this trade. In fact, it's now Monday morning and I'm going to go through to the charts in a moment. First, I just want to say at the end of this last week, I decided to move the stop loss on this trade so there wasn't so much risk left laying on this trade over the weekend. Let's go over to the charts now and I'll show you exactly where I got stopped out on this trade. So as you can see, the area that I got stopped out on was in fact above this high in the market. Now my stop was above this area where I did have the area of supply, where I've taken that entry. Now the first target was hit right here and a nice profit was taken out of the trade. So I moved my stop from above this high to this high just to give the trade room over the weekend as we closed right here in the market, and it has gone up over the evening here for me and it stopped me out at that area. So I've had a small loss on this trade. So the actual loss was this area here and the profit was this area. So as you can see, my snowman on the chart right now shows that my profit was much bigger than that loss I took. So I still walked away with a nice profit on this trade. So what are we seeing now? Well, the market has in fact, not only has it broken this trend line to the upside, it's now created this new area of 4-hour demand. Now the issue that I have now is we have this area of supply would need to be removed And top of that, now you go to those higher time frames, we have an area of supply on a daily here. If you went through my weekly analysis, you would know exactly what I'm talking about on this pair. We're inside a daily area of supply. We go to a weekly time frame. We have this area of supply. We're inside a weekly supply. And we go to a monthly time frame as well. You'll see that the monthly time frame, we have this area of supply that we've come off. So to be honest, on this pair right now, I still wanted to see a follow through to downside. But what have we been seeing on that daily? Since I took this entry, we've been seeing these areas of these rally-based rallies being created. So be very cautious now if you look to take a trade on this pair to the downside. Even though we are inside those areas of supply, you can see by looking at those charts that the market is still creating those new highs and continues to go higher. So welcome to this live trade review on the EURUSD pair. I'm looking for a trade. Unfortunately, I've missed my first entry. I was looking for an entry off this area of 4-hour demand. Unfortunately, the market did test that area. You can see we came straight into area for demand, but I didn't get filled on this trade. And since we've seen the market rally up. So what am I looking for next? Well, then I've dropped down to a lower time frame. Let's go down to 1 hour. You'll be able to see where the market has created this bounce. And then we've pushed down into this area of demand where I was looking for that trade. And now we've rallied up with this nice big engulfing candlestick. Now going down to a lower time frame on the 50-minute chart, you'll be able to see that we've now created this drop down, this rally away to the upside, removing this high in the market as well. So we can see that we've got that push down, rally away on the 15, we've pulled back. And where's the market now pulling back into? Just grab that drawing tool. We have this 15-minute area of demand where I'm just now looking for the market to push into and then bounce up. Now I'm going to place my stop at the low of this move to give me protection. And then you can see I've got my first target. If I can get this pullback, continue up, this is my first target. And if we go back to the 1 hour time frame, I've got that first target here where we see that drop away, and I'm then looking for my second target just before coming up into this area of supply on that 4 hour time frame. So there's a couple of positions that I've got open at the moment, waiting for them to get filled on this lower time frame. Even if you look at the 1 hour, we had this drop, base drop, we've removed that area of that supply, created this area here of demand. I'm looking for the market to pull back in and head back up. So what I'm going to do is pause this video here and I'll come back and we'll go through this trade and see how it's actually worked out. So it's been a few hours since we went through the entry on this setup on the EURUSD pair. As you can see, since the entry has now been triggered, I have two positions with two take profit targets. The entry came back nicely, retested that area which I'd drawn on the previous section of this video. This is that area of the 1 hour. As you can see, that take profit has just been taken. So the first profit target has now been hit on this trade. The market pulled back into my entry and it's rallied up to that first target. My second target, you can see, is where price is going to come up just before coming into this 4 hour area. So we just take everything off the chart. The second target is at this area where it's a 4 hour supply. So if we can see the market going up to here, I'm going to be potentially watching this area for a sell trade. Depends how the market comes into it. If I see a push straight through, then obviously I won't be selling it. But it all depends how the market reacts as it comes into that area. Now I've hit that first target, I'm most likely going to bring this trade to break even to protect the account and the profit already taken on this trade. And hopefully we can see the market continue up. There may well be some pullbacks on the way. Going down to a 1 hour again. This will go down to a 15-minute chart. You can see we just had a big bullish candle to the upside. So we may well see a pullback again before we go up. Remember, those markets do not just go straight up or straight down. They will move in a fractal nature and all time frames. And that's something you would learn with understanding the way the markets move with either supply and demand technique or obviously how those banks move the markets. So I'm going to pause the video again now we've gone through this first target that's been taken. I will come back once either I get stopped out at break even or this final target is hit with using this strategy. There's been quite a few hours now since the last update on this trade. As you can see, the market has now dropped off. I moved the trade to break even, so I ended up with a break even trade on the second half of that position. But it still ended up being a good trade for the week. Still got a nice profit to the upside, where I caught that first trade to that first profit. It's all about taking profits at the right time in the market. There's no point taking profit out of the market or letting the market run with that profit, leaving it on the table, and we see the market drop off and you lose all your profit just at break even. Now, break even trade, yes, you don't lose anything, but obviously you don't make any profit. And this game is all about making a profit when you take a trade. Now, if you end up with break even after break even trade, it is going to affect your trading emotions because you're not basically making a profit in your trading, and you need to be looking at making a profit. So I hope this video has been insightful to see exactly how you can look to still take profits out of the market and then end up being on the wrong side of the market now, but end up with a good profit for that week. So if you have enjoyed today's trade review on this EURUSD pair and you're not already subscribed to the channel, then make sure you subscribe to the channel today and hit that bell notification button. So what I'm going to do in this video, I'm going to walk through the US dollar CAD pair. Now, I'm not going to go and do the usual top-down analysis. You know that we have to do that top-down analysis. So I'm going to get straight into this setup, going through why it's a great time to look to take a trade, and then we'll go through how I qualified this trade for the entry. Let's go through exactly how you would do this and approach this in your trading. So what we see, we have an area where we have an area of supply formed, where we can see the nice drop away and then price eventually pulls back. Now, why are we looking for this area? Remember, I did say I wasn't going to show that top-down analysis, but if we do pop up to a 4-hour time frame, what do we have here on the 4-hour time frame? We have that bullish candle, which is that drop base drop away. Now, we do have this larger area here, but it wasn't the area that I was wanting for price to pull back to. And you'll see in a moment, we go back to the 1-hour time frame, what happened anyway. As the market rallied back up, price just smashed through these highs straight up into this zone. So that was what I saw when the market came back up. It's not just placing a set and forget strategy with an entry. You need to understand when you're seeing the market. Look at the bullish candles. Just get the right tool. Look at the bullish candle coming up here. The next one, look at the size of that candle as we come into the zone, and look at that bearish candle rejection. Once we got into this zone of supply, we saw the rejection and the market started to move sideways. So this is the point of the time where I go down and qualify this area of 1-hour supply. So we have this 1-hour supply, and what I'm then going to do is go down to lower time frames to qualify those zones to then find or fine tune my entry for a smaller stop loss, which will generate a much higher risk to reward. Look at how the market rallied up here. There was no bearish candles. So we have all this white space for the market to drop back down into. Now, we do have this area on the chart where price did go sideways right here, but all that was doing is giving you another chance entry on the lower time frames for an entry with a false break. Now, if you've not seen the false break video, I will leave that video at the end of this video so you can understand what that false break is. We'll go down into the lower time frame and show that as well in a moment. Now, the target on this one was simple, just targeting those previous lows where the markets have got to go down to be able to find that rally back up. Now, you can see on the candle it goes into it, we have that pin bar, we have the small rally up, and then price drops away again. But it's very, very simple when you understand the flow of the market or the dynamics of how the markets move. So let's now qualify this zone. So once I've seen the market come back into this zone, creating this rejection, I'm then going to go down to the 5-minute time frame. So we're going to pop down to a 5-minute time frame. Now, you can do this on a 15-minute, but I like the 5-minute. It gives me that confluence with much faster movement of price. Let's zoom in. And let's go nicely into this area. So let's have a look at price. We have the rally, base, rally, base, rally. So where is that last area of demand? Now, if you said the last demand zone on this chart is this candle right here, then you are spot on. And you're one step ahead of the other traders who didn't identify that area of demand. And what we're looking for is that demand to be removed, which is removed as the market comes down. That then creates this area of supply in the 5 minute, where you would set your entry with a set and forget strategy. And that's exactly what you could have done then. Have the entry as it comes back is triggered on this candle here. The stop is above this high. The market does come back again, comes back to these previous highs once again. And if we just bring the chart down, let's actually shrink the chart back down. You can see how price comes back to this area on a couple of occasions and then it drops away. Now, if we mark a line off here, you'll see that this last time it came up, it just pipped above and then dropped away. That's where any stops that was sitting at these areas where the retail traders have sold already, they have been taken out. Look at the last candle to the upside, big bullish candle upside. That's trying to fake in more buys in this market before the banks are going to push that market back down. But as a supply and demand trader, you start to see these concepts and understand what's happening on the chart to be able to capture these entries. And I'm going to shrink this chart down. So you can see here, this is the original entry. We've qualified it. This is the supply in the 1 hour. We've qualified it with this supply, caught my entry, the market's come down, and that is the target. So let's go through to this EURUSD chart. Now, the first thing we need to do is do our top-down analysis. So we're going to start with a monthly time frame. And here we're going to draw our areas of supply and demand first. So we're going to look for that area of demand. Well, from current price down to left, this is going to be our low of demand. This is the demand zone that would mark on the chart. Let's quickly mark a couple of lines for this area of demand. Let's make this a solid line, and we're going to mark off the low of that bullish candle. And in fact, the area we're going to mark is normally either this bullish candle or this bearish open price, where price is sitting right now, or you mark off this area. But because the bullish candle made this low, then rallied up, and then we rallied up, there is also an area of supply we could draw, demand that we could draw here on the chart. So this would be an area of demand, and this is a bigger area of demand. So I'm going to leave the low in place so we have that as a full zone. Now, from this spike in the market looking to the left, this is going to create the area of supply. And this is the area of supply where price recently found that area of supply and rejected and fell away. Now, we also spiked off this area of demand, and this made price sitting when it closed the monthly candle within the curve between those zones. So price could really go any direction. And this, as a supply and demand trader, is a very hard decision to understand which way the market is going. Stick with me in this video till the end and you will understand why I was looking to only sell from here and not looking to buy. Now, to start with, the trend had been bullish on the monthly time frame. We removed these highs and we continued higher, but then we started to make these lower lows in the market. So there's one reason to sell with that trend analysis. Price is starting to head lower. Now let's go to the weekly time frame. And again, you have to look at doing the same process with this entry. Where is price going? Well, we can see price made this high in the market, dropped away, and removed this low. So the last area it bounced off was demand. But which way was price going as a trend? Well, it made a new low in the market. And when it pulled back, where was it pulling back into? Well, this is the key to understanding supply and demand. You now need to make sure you know where those areas of supply and demand are on that weekly time frame. This would be the area you'll be looking for sell. You have all the sellers that were placed here and they sold the market down. Buyers were here and they pushed the market up. So why are people selling from here? Because it's coming into this area. It's a large area of supply, this area. It's a big area of supply, yes, but it's still a supply. So as price comes into this supply with this big bullish candle, we then need to know where the area of demand was. The area of demand, quite simply, we go from the low of price, and this would be your area of demand. So price came off a demand zone as well when it rallied up. So it's an obvious reason why price found support here, buyers stepped in and pushed the market up. So if the markets were pushed up from demand and now we entered supply, wouldn't you expect price to fall, especially when it's making new lows in the market? So let's now go to the daily time frame. So when we see price breaking these lows, what broke that low? Well, we have what we call a drop, base, drop. This bullish candle is what created an area of supply and price removed that low. So we've marked that off as an area of supply. So if price was to come back up into this area of supply on the daily and this area of supply on the weekly is where I was saying about looking for any sell trades. Now, I wasn't suggesting taking a sell and forget strategy that some of you may already know about with the channel and the sell and forget strategy that I share on the channel, because this area was too large for a trade. The stop was going to be too high. So you needed to look for those lower time frames, the 4 hour, the 1 hour, to look for an entry. Now, right now, price is testing an area of weekly demand. So I'm going to be watching price very, very closely here, because we're at the end of the week on a Friday and I'm sitting at an area of monthly demand. I may well now look at closing this trade early, or at least closing half of the profit on this trade. If price continues through, then it's going to go to this weekly area. This weekly area of demand where price once before found that support and buyers stepped in. Now, I'm expecting price to most probably come back down to weekly before it can rally out. But again, I will be watching it very closely today. So the area of demand I can draw. I'd have to go back a long way in time to find a demand zone. But when price found this area of structural support, there was buyers stepping in, pushed price higher. So there is an area of demand, but we're going to use that weekly area for the target. The entry came off a 4 hour time frame on this one. It wasn't a 1 hour. It could have been a 1 hour entry, but I used the 4 hour time frame. And always looking for is when price reversed from this area of daily supply, I was looking for an entry to catch the lower time frame. The area that I took the entry off was this zone in the market, and this is where I've caught the trade and I'm already in a risk-free trade. It's knowing how to take that trade set up when you understand the movement of supply and demand. Now, this trade review is going to be something slightly different. It's going to be going through a technique that I applied to the chart using candlesticks with supply and demand. In fact, it's allowing me to qualify zones on multiple time frame analysis, going down to lower time frames for an entry to capture high risk reward trades. Now, this entry's come off a 5-minute time frame, and you're going to see how this trade is potentially giving me a 13-to-1 risk to reward compared to a 3-4-to-1 risk to reward of a 1 hour entry. So let's go over to the charts so you can see exactly how this is done. So let's go over to the daily time frame, and we're going to look at the area of supply. Well, in the area of supply, I was looking for a sell-off. We rallied up, we dropped down. I was looking to see if price rallied higher from here. We didn't. In fact, we continued to drop. So we made that drop, base, drop. That's then created this area of supply in the market. As price closed and removed this low, we've then seen price this week pull back into that area of supply. Right there is where I was looking for a 1 hour entry. So we go down to that 1 hour time frame, and we can see where price came in to that area of the daily supply, and then we've dropped away, creating a new area of 1 hour supply. So this is now my 1 hour supply zone. We can now remove this daily zone and move back to price. Now you can see where my target is sitting. Now that target is logically sitting at an area of structure in the market. It's not just been placed because it's an area I want to place my target. It's an area where it's logically sitting. We go back in time, you'll see where price reacted here once and again. It's an area where price is reacting, and it's the first logical area where I'm expecting price to come back to. It also had plenty of space. Now space is when we can see nothing but the white candles going to the upside. We can see there's loads of space for price to drop. So I've got room for it to come back down to this area on the chart. So once I've qualified that daily zone with this 1 hour zone of supply, we could have taken an entry quite simply off this 1 hour zone. And you can see that would have been between a 3-to-1, 4-to-1 profit target. Now, anything over 2-to-1 profit in my book is a good trade to take. It's using good risk management, and anything over 2-to-1 is something I'm happy to take myself. Now, even though that's a good trade to take, what I want to do is capture those high winning profit trades. This means even if I only capture one or one trade a week or one trade every 2 weeks, as long as I'm capturing those high profiting trades, that's even better for me. It's less time at the charts, more time enjoying what I want to do myself. And this is exactly what you're now going to see here. After qualifying that daily zone with this 1 hour zone, I was then looking to qualify this 1 hour zone. And when we see price pushing into this area of supply on the 1 hour, this is where I went down to my 5-minute time frame and I caught an entry off the 5-minute supply. We created an area of supply on the 5-minute. We can remove this 1 hour supply. There's my supply zone on the 5-minute. This was my entry. Now the target is increased nearly to a 13-to-1 risk to reward. Now you can see the trade is now over 8-to-1 risk to reward already, and that's my final target of a 13-to-1 risk to reward. Now they are the sort of trades what are going to make you much more profitable in the long run. And like I said, one of these trades a week or even one every 2 weeks is a fantastic way of looking at trading. You don't need to be trading in the markets every single day. As long as you understand the way the market moves and you understand how to use these supply and demand zones and how to qualify them, you can easily catch trades like these. An entry came off the 1 hour time frame, and you're going to see that this trade came within this area of a choppy market. So I'm going to show you how you can use supply and demand to actually still catch trades in a choppy market. So the first thing we need to identify is where our major zones on the daily are before I took the trade. Now we have a trend line we can draw. We can draw this trend line as price went higher. We broke the trend line, and then we can draw this area of supply to look for a sell trade-off. So let's mark this out as a supply zone. Okay, so there's our area of supply. Now for a target on this one, I was targeting this previous area of market structure where we have a bounce. You'll see in the lower time frames where we had this bounce and then price came into that structure once again. So there is my area of supply to look for a sell. Now I'm not going to go to those higher time frames. I'm going to keep this video short and sweet so you can see exactly what I was looking at. So when we broke this trend line and closed this low, we created this area of supply to sell from. Now you can see the market went up nicely into this area of supply and since has dropped off and has in fact hit my target today as well. So let's now head over to that 1 hour time frame. I'm going to shrink the chart down a smaller section. So as we came out of that area, you can see we had a test as price dropped, retest and fell away. So to look for another trade, what I needed to see was this previous high removed. And as you can see, that happened on this bullish candle to the upside. And then I was looking for my reversal at this area. And you can see where my target was, where price bounced once, twice, 3 times, came down and hit that target nicely. Now the entry came off an area of supply that was created on the 1 hour. Okay, so we can draw this area. Let's change this to a different color so you can see the zone. So this is the zone of supply I was looking for a sell on the 1 hour. Again, we see price continue higher. We have this area of demand, price rallied up, pulled back, we went higher again, and then we had a big engulfing candle to downside, removing all those demand zones. Price then came back, tested that zone on the very next candle, and dropped away to that target. So let me just go to my tool, and you'll see that this trade made a nice 6-to-1 profit for this trade this week. Now today we're going to go through this pound US dollar hour time frame live trade review. I'm going to show you how I've actually confirmed an entry off this area of 1 hour demand with an entry on a 15-minute. Now look at the difference with the stop loss compared to what the stop would have been with a 1 hour entry. And I have a target here for a short-term 4-to-1 profit on this trade. So let's now dive deeper into why I've taken this trade. And we're going to take this off the chart. I'll go down to the 15-minute entry time frame in a moment. So keep watching to find out how I actually caught the entry. But the setup itself is coming based off this area of 1 hour demand. Now look at the way the market removed this trend line, created this engulfing candle, and we saw the momentum push to the upside. Now that is all based on that false breakout. I'll leave the video at the end of this video, so make sure you watch all the way through to the end. Then you can watch that false breakout video to understand exactly how you can apply this in your trading going forward in 2021. Now, after we see this manipulation happen, we create this area of 1 hour demand. This is where I'm looking for any pullbacks to come into for another buy back up, hopefully back up to those previous highs. Now, what I do here, I tend to go down to a lower time frame to confirm my entry so I can get a tighter, smaller stop loss. You can see here the size of this stop loss compared to the actual profit on the trade is very small. Now, if I was taking off this entry and I was only targeting this, then we can see the risk to reward is going to be a lot less. It's all about creating a trade where your risk to reward is going to be high. So the more trades you take, the more profit will you eventually have at the end of the year. On the 15-minute time frame, you can see as the market came back into this area, we push in. The last low is created by this candle here, this bearish candle. Then we see the rally away. What that does, that removes this last lower high in the market. And that is what's going to create this area of demand. And you can see the market's come back now into my entry area. We have tested it once. It may come down for a deeper push and then perhaps even head higher. But even if the market continues lower and stops me out, I'm not worried because the setup and everything was exactly how I like to trade. If it's a losing trade, it's a losing trade. It's how you can come back from a losing trade and continue forward with your trading. And as I said, when we look for these high risk to reward trades, then one losing trade is not going to affect another winning trade because the potential of the profit will always be bigger than any losing trade. So what I'm going to do now, I'm going to pause this video and then I'm going to come back at a later point, whether it actually stops me out on this trade at a full loss or whether I see the market rally back up to my final target, where, as I said, I'm looking around about a 4-to-1 profit. Okay, so it hasn't taken that long at all today to get to that final target, where it's sitting right here. That's a 4-to-1 profit, an 8% profit today with a 2% risk on that trade. Now, it all started from this reversal, this area on the chart, creating that false breakout. Remember what I said in the first part of this video? I will leave that video at the end of this video, so make sure you watch the rest to the end and watch that video straight afterwards. It'll teach you to understand what that false break is, and then understanding the way the market moved with the momentum move to the upside, and then the way, how long the market took to come back into this area of demand. Let's have a quick look at those candles and see how long it took from this low to this area. It only took 8 hours to get to that area, but coming from this point in the market, pulling all the way back, it's nearly 40 hours worth of candles. So understanding that this is where the markets are being moved in momentum by those banks, and that is where they are pushing that market. This is not where you want to be trading. You want to be waiting for the market to come back. And like I said, even a trade off this area of demand would have captured you a good trade now, and you'd be in some good profits. Now this market may well keep continuing higher and breaking those highs, but I was looking for a short-term trade to get me in and out of the market today with a good profit, and that's exactly what has happened now. Let's now go down to that 15-minute time frame where we took that trade, and obviously the entry came off this area of demand. The market rallied up, removed this high, pulled back, was triggered, and rally away. Now look at the strong momentum to the upside. Do you think this is retail traders moving that market? Of course it isn't. It is the banks. But today this is all about demonstrating to you how easy it is to understand the way the markets move with that momentum. Remember, it's momentum where you want to be catching your trades. You don't want to be taking those trades all the way down here. It's a messy market. You want to be catching your trades back up off this area of demand. So I hope this has been insightful today with understanding the way I use supply and demand, as well as the way I look at the markets, the way they move with those banks. So I wanted to just record this live trade so you can see the power when you understand the markets. Now this entry is on a 1 minute time frame setup using a 5-minute area of demand. Now you can see my target just got missed. This is where my target was sitting, and I'm only about under half a pip away from hitting that target. Really unfortunate. It would have been over a 14-to-1. I just wasn't seeing it at the PC when I saw this trade take off. If I had seen it there, I would have closed the trade out manually. So I'm currently at break even. I'm going to be watching the chart now to see what happens. If I start seeing price continue to break down, I'm probably going to close it out around a 7-to-1 profit, which is still a great trade, but a 15-to-1, 14-to-1, should I say, would have been much better. Now we could see price continue up. Let's just go through. I've taken this trade. Now go to the 5-minute time frame. And what we saw, I originally had an entry, which I've taken today at this area, where the market rallied up. We came back into this area of demand. The market went up. Again, my target was sitting here, and it reversed. I went to break even. The news basically pushed price back down, and it stopped me out. But what I then saw, when the market came back again into this area of demand, I went down to the lower time frames, which was that 5-minute time frame. This was a 15-minute area of demand. This is the area of demand. There's the break up, pull back to this area of demand. There was the entry off this zone. Now, when the market came back, if I go back to that 5-minute, you'll be able to see when the market came back into this area, we had this area of demand that I have drawn out. The market came back in, and just before the market entered that area, I used my banker's pattern to look for a reversal, and it's here where I saw the market showing me that false break into this zone. And as soon as I saw this false break at this area, these lows, is where I pulled the trigger to buy this trade. So I basically was waiting for the market to look for that entry. So once the market was down here, I took the buy. You can see the market with the spread. We have a 1 pip spread on this pair. That was when I got triggered into the trade, and we rallied up. I've taken some profit already off this trade, and I was looking for that final target just over that 14-to-1. Now, if the market continues up, I may well just watch this market and start locking in my profit as price goes up. But this was a great opportunity to show you the power of understanding the way the markets move. Not only can you take trades off those higher time frames, but you can capture trades on these lower 5-minute time frames with a 1-minute price chart once you understand the markets. Why was it there for me to take? Well, you have to do your top-down analysis. You need to understand what is happening. And right here in the market, let's go in closer to this area. So what we see is the market created these lows here in the market, and we also had this low. And then what happened was, once the market bounced up, we saw the break to downside, removing all these stops, Any stops here that people had bought to the upside were removed. Even this one candle here was another trap to make buyers into the market. And what happened was, once those buyers were taken out, or here, by this low, they then sold the market back down, removing that low and these lows, and then we saw the market reverse back up. So once I saw this potentially happening, I had a good idea that we needed to look for any buy trades, short term, not long term. Going down to the 4-hour time frame, this is what I was seeing on the 4-hour. The market rallied up, we pulled back, and then the market obviously rallied up here again. To start with, we had a potential trade that we caught based off when the market rallied up. Here we created this area of demand on a 4-hour. You can see the market then came back into this area where you can look for a trade to go long. Now it's going down to lower time frames, which helps you capture those trades. So if I go down to the 1 hour, this area on the chart, you'll be able to see where I caught that trade. And this is that area where we have the market rallying up, pulling back, and then we false break the downside. We created this push up and the market came back right into my area of demand. And that demand zone was this bearish candle. And you can see the market came back. This was a buy, looking for the market to go back up to this area. You can see that's where I closed out the trade. Well, in fact, I actually got stopped out as I was trading the trade up to that area. So there was the potential of the first trade. Then the market rallied up from here. We pulled back and we rallied up again. We created this zone. And that's where I've caught another trade. You can see where I've marked off my candlesticks where I'm looking to take those trades. So again, the market came back to this area of demand. Pulled in, the market's gone up to this area. So this is where I was watching the market. Let me just mark out that area correctly. This is a lower time frame zone. So this is that zone we can see area of supply. We have taken the buy off this area of demand. On this area, the market's gone up, just fell short, and I basically closed that trade as it started to reverse. Now, when the market creates this, it creates a lower time frame area of demand here, which if I go down to that 15-minute, is where we're going to see this. Let me just remove that, and we'll mark out that new one. This is that area on that chart where we can see the market broke these lows. They took out the stops, we rallied away, we've pulled back. This is where I've caught another trade. I was looking for price to go back up to here. Unfortunately, news came out and it's pushed me back down at break even. And obviously you can see where the trade has come from now. Because since the market rallied up, removed this high here in the market, I was able to draw out this zone. So then the market was coming back here. You can see when we rallied up. So when the market came back into this zone, I'm not actually taking a 7-forget strategy here off this zone. What I was looking for was the market come back into this zone, show me the reversal, pulling back, and that's where I caught that trade. So you can see exactly where that was entered right there. So that was the entry off this area of demand. If I just zoom in so you can see that demand zone better, let's remove everything off the chart. So the demand zone I'm talking about is obviously where the market comes down. We create this bearish candle, we break these lows, and then we rallied away, taking out these highs. Once I've seen this happen, I then was able to draw out my demand zone, which is this here, this zone here, and this is where I caught that trade. The market rallied up, pulled back. This was a 7-forget entry, and the market went up. Now, unfortunately, didn't get to that target, as I just said. I went to break even and I was holding it because I was waiting to see what happened. News pushed the trade straight back down, stopped me at break even. But this then allowed me to look at the markets in a different way. I look at the markets on a fractal nature. Each time frame you will find the same things. But as the market rallied away from here, going down to the next time frame, was the 5-minute, you can see after this pullback to here, we then rallied away, making this new high. So we'd already broken this high, and then this high here was broken. We pulled back, we created this area of demand. and that's where I then saw the market coming back in. Now before I took that trade, going back to that actual entry on the 1 minute where I saw the entry, you can see where the market created these lows. They pushed the market down. This is where I've caught my entry as the market then started to reverse, and up we go. This time I was hoping for that target to be hit, and again just missed that final target. But that is exactly how I use price on the chart with supply and demand, and exactly what you can learn if you want to go down that route to learn how to trade for yourself. Not actually looking for signals to wait for signals to trade, but actually reading the markets, understanding the markets move. Once you understand that, then it's easier to capture trades even on a 1 minute time frame. Now, I don't suggest you start doing this straight away. This is years and years of practice reading the markets, reading the charts, and understanding the way the markets move. So what I'm going to do now is, we've seen the markets making these swinging patterns. So we made a new high, made another new high, and we made this high. Now the market's pulled back to here. We may well go back up to here. That's what I'm looking for. What I'm going to do is I'm going to move my trade. I'm going to move the trade below this low here. Lock in. We're knocking in about 99 to 100 pips. So I've locked that trade in. So if price does now fall down, I'll be stopped out. Now obviously I'm giving away a lot of pips. Unfortunately, I wasn't sitting at the PC when this was happening, and that is a mistake caused by myself. Should have been here ready to close this trade, but obviously I missed it. But I'm happy I've got some good pips out of the market. This is going to be the last day that I'm going to be trading as well. It's now 20 to 5 UK time in the evening, so there's no more trades now. We are Christmas Eve tomorrow. This is going to be me packing up until the new year. Just wanted to share with you guys, my YouTube viewers, exactly how I look to trade the markets, and I wish you all the best in your trading future. And of course, if you want to take the next step, then check out those courses on my website, which you can do so by clicking the link in the description of this video. Now, if you're not already subscribed to my channel, you want to see content like this time and time again, then why not subscribe now, and also hit that bell notification button so you'll be notified the next time I release another video.